Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A reactionary bullish engulfing pattern on Friday after the previous four bearish black crows. The reactionary move up was, I suspect, prompted by the market pushing down below the combination of the flatlining gold long moving average, currently at 108.71, and the nearby 50% Fibonacci line for the whole of 2023 at 108.64. However, the move back up was limited, closing in between the 50% Fibonacci line and the long moving average. Overall, this was the first pullback up after the break lower 2 weeks ago, below the significant bright red, slowly declining head and shoulders neckline extension of the July 2017 to November 2018 move, currently at 109.80. I had previously stated I regarded the bright red neckline as a proxy for the neckline for the mid-August to early October even eve double top. I had previously laid that also a primary target X down in the 108.88 zone with a secondary harder to reach target X1 down in the 107.91 zone. Now the primary target was reached last week and we came close to the secondary target late last week as well. It should be noted that whilst the next definitive support below is the May 2020 low at 107.66, the zone below the 50% Fibonacci line at 108.64 down to at least the April 2020 low at 107.25 is a congestion zone dating from earlier this year. Meanwhile above, well, the next resistance is the flatlining medium moving average, currently at 109.36, and the 50% Fibonacci line of the January 2021 to September 22 move at 109.44. So far today, seemingly still capped by the gold long moving average, with the market dipping below the 50% Fibonacci line at 108.64, but none too aggressively. Cable, aka sterling against the US dollar. A second bullish white soldier on Friday after the previous session's immediate countering bullish harami. Overhead we have the rising green short medium moving average, currently at 131.06, whilst below we have the support from the slowly rising mauve medium moving average, currently 129.62. So far today, a slightly lower open, but a try higher and then lower, though still within Friday's range, and looking like a reactionary bearish harami right now. Euro sterling. An indecisive spinning top on Friday, but with a long tail on it, such that the market has made new lows last week not seen since April 2022. Overall, the market remains within the dark blue highlighted mid-April to early October, quite acute, and I'm always worried about that, quite acute bearish shift pitchfork, in between the overhead upper time, currently at 83.60, and the middle time below, currently 82.91. Now, the middle time was tested on Friday, but obviously held. I am concerned not by the bearish nature of this pitchfork, but by its acute angle of attack. Now below we have a congestion zone between 82.74 to 82.79, containing lows from 2020, whilst above we have the August 2022 low at 83.38 and very recent congestion based around this low. Now so far today, a small move higher, pushing up and out of Friday's range and up to the August 2022 low. US dollar against the Japanese yen. A reactionary bearish black crow on Friday after the previous second bullish white soldier. In part as a reaction to the prior move up over the 50% Fibonacci line of the July 23 to July 24 move at 149.61. And in part it was an avoidance in testing the combination overhead of the slowly declining mauve medium moving average, which is currently at 150.72, and the recent 50% Fibonacci line at 150.76. Beyond these, we have the very slowly rising gold long moving average, currently at 151.36, whilst below is the lesser Fibonacci line at 148.68. Overall, we still have below the dark blue neckline, currently at 145.89, of the lopsided mid-August to early October reverse head and shoulders bottom that was originally masking as a possible bearish half hesitation. Now, this pattern still has a primary target at target X in the 151.48 area, and a secondary harder to reach target X1 up in the 153.60 area. The market will have to overcome some considerable resistances topside, apart from the ones already mentioned, notably the bright red shallow middle time, currently at 152.36, of the late December 23 to early August 2024 bullish shift pitch hook. The only other thing to bear in mind is the weekly key reversal up the market made 3 weeks ago. Now, so far today, a follow-on lower to start below the 50% Fibonacci line at 149.61, but then a counter-reactionary move back up over the 50% Fibonacci line, though not by far as yet, and looking like possibly a small bull hammer. If it's going to be a bull hammer, but a hammer, let's call it at that. US dollar against the CNH, the offshore Chinese yuan. A bearish black crow on Friday after the previous 2 sessions of an indecisive doji cross and indecisive spinning top, respectively. The top side was capped, unsurprisingly, by the recent 50% Fibonacci line at 714.02, and prices dropped down to close at on the 38.2% Fibonacci line of the October 2022 to January 23 move at 711.61. However, this 38.2% Fibonacci line is also the site of the dark blue uptrend, currently at 712.61, of the late September to date quite acute ascending wedge pattern, currently 712.61 to 716.57. Further below, we have the flatlining short medium moving average, currently at 710.13, just above the lesser Fibonacci line at 709.99. Now, so far today, a slightly higher open, but a move below the 38.2% Fibonacci line at 711.61 and the dark blue lower trend line, though this has seemingly not been sustained as prices have moved back up to the dark blue lower trend line right now. US dollar against the Mexican peso. An indecisive doji cross on Friday, but with a long tail on it that stretched down below the lesser Fibonacci line at 1979.14 and the April 22 low at 1971.68, and towards the massed supports below of the bright red lower time, currently at 1960.15, the very important big picture April to July bullish shift pitchfork, the combination of the dark blue lower time, currently at 1952.89, of the recent mid-August to mid-September bullish shift pitchfork, which ties in with the purple neckline, which is currently at 1954.02, of the late July to late September lopsided head and shoulders pattern, increasingly looking like a head and shoulders continuation pattern, and finally the green short medium moving average, currently 1943.05. All these have held up repeated attempts to break lower over late September to early October, so it was no surprise that prices were extremely wary of testing down there. I should point out that the reason prices tried lower in the first place was because of last Thursday's shooting star pattern, type 1 bearish, which looks to have been a bit of preemptive move. Topside, the market was capped, especially on a closing basis, by the congestion area between 1987.75 and 1991.31, containing the December 2022 high at 1991.31. Beyond this, the next congestion is up at the August 24 high at 20.04.45. Now, so far today, a lower open, but then a vigorous attempt higher over the 1987.75 to 1991 congestion area, making today look like a bullish engulfing pattern, which isn't that hard to do considering the previous session was an indecisive spinning top. But I'll be very careful to watch where we close, within or without that 1987.75 to 1991.31 congestion area.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.